Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Hope you guys are doing fantastic. I'm outside today. There's a continuing education class that I sponsored. So I'm here at Indian Tree Golf Course. Gorgeous day outside. Happy Valentine's Day. What a great state that we live in, and real lucky to getting snow in the mountains where it should be. Great weather down here. And let's keep everybody on the East Coast in our thoughts and prayers because they're getting kind of some bad weather. So wanted to get with you and let you know what happened with interest rates this week. It was a pretty quiet week from economic data standpoint, but there was some yelling going on in Capitol Hill. Our Federal Reserve Chairman, Janet Yellen, or chairperson I should say, had her first testimony at Capitol Hill. It was actually supposed to be for 2 days, but because of the weather, the second day was postponed, and all eyes were on our new Fed chairperson, what she would say, and if there'd be any major clues or divergence from the path that the Federal Reserve was on. And it wasn't expected that there would be, just because she's been on the Federal Reserve for quite some time, board, and everybody expected that she would be kind of status quo. But here's what she said. She basically said that they will continue to keep a very accommodative stance in terms of low Fed funds and discount rates. It doesn't look like there's any sign of them changing interest rates. They have said, though, that they would begin to look at it when the unemployment rate reached 6.5%, and that was previously. And we're pretty close to 6.5%. The unemployment rate right now is at 6.6%, but really there's not a whole lot of strength to the economy. So the Federal Reserve will be, again, backpedaling on that probably a little bit because one of the reasons that this unemployment rate is so low is just because of the labor force participation rate. So she also said that they'll continue to reduce assets purchase programs, so they're going to continue to taper buying mortgage-backed securities and treasuries. So that's not expected to continue as long as the labor markets show that there's some strength there. And the labor markets, while they're not great, they are strong enough to continue that tapering of the purchase program. So real status quo. The stock market really liked that, and that caused money to flow from stocks. From bonds into stocks, and that caused interest rates to be a little bit worse this week. So we've had a really good run. Rates suffered a little bit this week, but it's not anything to be majorly concerned about. A couple other items of note is that for the second week in a row, the MBA application index purchases were down 4% last month, and also 4% last month and 5% the month before that. So there is some slowing going on in the purchase market. That's not of a major concern. We did see lower than expected capacity utilization and also lower retail sales. So not super strong for the economy. So interest rates suffered a little bit, but Janet Yellen basically said status quo here for the Federal Reserve. Next week we're going to see more economic data coming in the form of Producer Price Index and Consumer Price Index for inflation. I'll let you know what happens with that. If you have any questions, please give me a call. Thanks for joining me with Java with Jared. Happy Valentine's Day. We'll talk to you soon. Bye-bye.